Hi friends, welcome to Glim Academy. Today I have got the MCQs of topic finance and budget. As you know, the time is very less. We have to be as quick as possible. Before starting, I would like to thank all my subscribers who are motivating me. We are now a family of more than 200. Words are not enough to express my gratitude. Once again, thank you each and everyone for appreciating my efforts. I am requesting all new viewers to subscribe my channel. Let's get back to studies. I have covered in my previous videos MCQs of topic higher education and ICT. Looking at the dates, we cannot stick to one topic for long time. Hence, we will do some MCQs on topic finance and budget today. So let's begin. Question number 1. Plant utilization budget and manufacturing overhead budgets are types of production budget, sales budget, cost budget, none of the above. Answer is cost budget. Number 2. R&D budget and capital expenditure budget are examples of. Options are short term budget, current budget, long term budget, none of the above. Answer is long term budget. Budget relating to the key factor is prepared after other budgets, with other budgets, before other budgets, none of this. Answer before other budgets. The purpose of financial market is to. Options are increase the price of common stocks, lower the yield on bonds, allocate savings efficiently, control inflation. Answer is allocate savings efficiently. A budget process which demands each manager to justify his entire budget in detail from beginning is it functional budget, master budget, zero based budgeting, none of the above. Answer is zero based budgeting. It is a budgeting process which demands each manager to justify his entire budget in detail from beginning. Number 6. In fixed budgets, costs are classified according to their nature. True or false? In fixed budget, false. Number 7. While preparing sales budget, which of the following factors are considered? Non-operational factors, environmental factors, both A and B, none of the above. Answer is environmental factors while preparing the sales budget. Next is TAS provides an estimate of the capital amount that may be required for buying fixed assets needed for meeting production requirements. Options are production budget, cash budget, capital expenditure budget, none of the above. Answer is cash budget. Next, dash is the first step of budgetary system and all other budgets depend on it. Cost budget, sales budget, production budget, none of the above. Answer is sales budget. Next, dash also known as subsidiary budgets. Master budget, functional budget, cost budget. Which one is also known as subsidiary budgets or none of the above? Answer is functional budget. Dash is prepared for single level of activity and single set of business conditions. Fixed budget, flexible budget, both A and B, none of the above. Answer is fixed budget. Number 12. The process of budgeting helps in the control of cost of production, liquidity, capital expenditure, or all of the above. Answer is all of the above. The process of budgeting helps in the control of cost of production, liquidity, and capital expenditure. Which of the following statements are not true about budget, budgeting, and budgetary control? You have to be careful. It is written not true. Budgetary control works on the basis of best option. B. Budget is one of the important mediums of communication. C. Budgeting develops the quality of objectivity in planning. D. None of the above. So answer is none of the above. That means all are true. Which are not true? So nothing is incorrect. All are correct regarding budget. Then which of the following statements are true about budget, budgeting and budgetary control? A. Budgeting is business estimates for future period. B. Budget is the process of preparing business estimates. C. Budgetary control is the means to achieve performance on the basis of budget. D. None of the above. Which statements are true? Answer is C. Budgetary control is the means to achieve performance on the basis of budget. Which of the following statements are true about budget, budgeting, and budgetary control? A. Budgetary control is a wider concept, whereas budget and budgeting are narrower concepts. B. If there is budgeting or budget, it is not necessary that there should be budgetary control also. C. If there is budgetary control, budgeting and budget are must. D. All of the above. Answer is all of the above. Yes, all are true. See, this video might get little lengthy because this topic is really vast. I have brought you the questions which are expected, but nobody really focus on it while studying from books or notes. As I know, in TA net GRF pattern of questions, I decided on these questions to be of same importance as other basics. Okay, next. According to George R. Terry, DAS may be described as a process of finding out what is being done and comparing actual results with the corresponding budget data in order to approve accomplishments. Option A, budgetary control, budget, budgeting, none of the above. Answer is budgetary control. Next, which of the following statements are true for forecast and budget? A. Forecast and budget are one and the same thing. B. Budget is prepared after the forecast. C. Forecast and budget both can be expressed in financial form. D. All of the above. Answer is budget is prepared after the forecast. The process of budgeting includes A. Preparation of budget. B. Budget control. C. Budget coordination. D. All of the above. The process of budgeting includes. Answer is all of the above. It includes preparation of budget, budget control, and budget coordination. Who was the first finance minister of independent India? A. Sanmugam Chetty. B. John Mathai. C. C. D. Deshmukh. D. Liaquat Ali Khan. Answer is Sanmugam Shetty. The budget was formally introduced in India in 1860, 1947, 1950, 1868. Answer is 1860. It is in India. Okay. The authorization for the withdrawal of funds from the Consolidated Fund of India must come from. Let me repeat. The authorization for the withdrawal of funds from the Consolidated Fund of India must come from A. The President of India. B. The Parliament of India. C. The Prime Minister of India. D. The Union Finance Minister. Answer is the Parliament of India. The rate which the income tax is imposed in India is called digressive rate, progressive rate, regressive rate, proportionate rate. Answer is digressive rate. What do you mean by fiscal federalism? A. It refers to the devolution of power and responsibilities of national, subnational, and governments. B. It refers to the financial relations between units of governments in a federal government system. C. It is the amount of money that households have available for spending and saving after income taxes have been accounted for. D. It states that when per capita income increases above the minimum specific level, population tends to increase. Answer is it refers to the financial relations between units of governments in a federal government system. B. The word budget is mentioned in which of the article of the Constitution of India? Article 266, Article 112, Article 265 or none? Answer is none. Nowhere it is mentioned the word, particular word budget. Which is the main point on the basis of which public finance can be separated from private finance? A. Price policy. B. Borrowings. C. Secrecy. D. Elasticity in income. Public finance can be separated from private finance. Answer is secrecy. Who is the father of public finance? A. Dalton. B. Piaggio. C. Smith. D. Musgrave. Answer is Dalton. A budget where there is excess of expenditure over revenue is called A. Surplus. B. Deficit. C. Balanced. D. Zero based. Answer is deficit. Is the excess of expenditure over revenue. Which of the following is a statutory body? A. Finance Commission. B. Planning Commission. C. State Planning Board. D. None of these. Answer is Finance Commission. Then the VAT was first introduced in the year 2003 in the state of, is it Bihar, Odisha, Haryana or Kerala? The answer is Haryana. Keynes has suggested compensatory fiscal policy to counter what? Recession, boom, inflation, None of this. There is recession. In which year GST was first introduced and where? A. 1954 in France. B. 1977 in USA. 1953 in Canada. 1955 in UK. Answer is 1954 in France. GST was first introduced in France. The largest component of revenue expenditure in India is A. Pension, B. Interest payments, C. Education, D. Health. Answer is interest payments. It's very much important. The largest component of revenue expenditure in India is interest payments. Next, the balanced budget principle was advocated by A. Keynesians, B. Mercantilists, C. Classical school, D. Neoclassical school. The answer is classical school. Which of the following is not the main theme of Budget 2020? A. Aspirational India, B. Caring Society, C. Housing for all, D. Economic development for all, E. All of the above. Answer is housing for all is not the main theme of Budget 2020. Others are in the theme of budget. Aspirational India, caring society, economic development for all. Okay, we are now at the end of this video. Do not forget to like, share, comment, and subscribe. As I have already told you all, time is very limited. So focus on each and every topic in a single day as per your timetable. Both section A and B are important. Watch as many videos as possible from YouTube and study books or materials available to you. Thank you so much for watching.